Welcome back. Well, the market's quite okay. The mid-cap side of the market is really the one to focus on. And from that, we have Century Textiles. It's a company, of course, which has many divisions. The name is Century Textiles, but it's got paper, it's got, I think, real estate as well, textiles itself, of course. Snehal Shah, CFO at the company, is joining us now. Mr. Shah, good morning. Thanks a lot for joining us. Let's start with the paper segment first, because that's the one where we're seeing quite a bit of traction of late. Are you seeing, real improvement in demand, and do you see improved numbers in this space?
Yeah, certainly. I think there is a lot of improvement in the demand, but what is happening is that along with the demand, the input prices are still firm. So, the margins are kind of under pressure. It's up to some limit that we can, pass on the increase in the prices, increase in the input prices to the consumer. And the prices of the final products are at least actually more or less at a lifetime high. So, yes, I think over a period of time, we should be able to generate much more margins going forward once everything, kind of has a level. We are into three segments. We are into writing printing paper, where things have started looking up. They were pretty down during the COVID period. What is good for us is that we are into tissue, which is showing good traction now, as well as we are into packaging products, which are also doing extremely well. So overall, we see a good future going forward in the paper business.
Okay, Mr. Shah, and that's the chunky part of the business, right? Almost 75% of revenues is paper.
Yeah, absolutely.
Just a couple of questions.
It's not just 75% of the revenue, but what happens is the EBITDA contribution is still skewed. So it's about 85% from the paper sector and about 10% from the, textile sector.
Okay. So just to spend then a little bit more time on the paper sector, at the end of the first quarter, you said the outlook for the paper segment is looking modestly positive. I think that's probably the word that you used in the presentation. The market analysts have been very bullish on paper companies because of what's happening in Europe, the gas issue, etc. So could you just briefly put all of that into context for us? And just one more thing, you also said that the packaging board business, perhaps because of the slowdown in FMCG, etc., may look under some pressure. So just address that as well.
So as far as I think what is happening is being in three segments, I think the tissue segment, let me start first with the tissue segment. What was happening in the tissue segment during the COVID period, there was good at-home demand, but away from home where we have these institutions, your airports, your hotels, etc., which were not doing well. So they have now opened up, and therefore that away from home demand is also picked up. I think we're more or less seeing a lakh of rupees per ton price on the tissue market. And we are the largest domestic player in tissue market. Therefore, I think we see a good traction for that. We have doubled our capacity over there. On the writing and printing paper, again, now with the educational institutions, etc., opening up, and there is this new textbook policy which is going to come up. So that is going to see a lot of demand. So we see a positive outlook for that too. On the packaging board, I think we don't see much, the issue here is going to be more about up to what price would, we would be able to maintain ourselves before the consumer move on to a substitute or like a wrapping or whatever it is. So that is the only issue that we are seeing, but I think it's not something which is going to be significantly alter the space over there. So we certainly see a good traction in all the three segments that we are in, and we are certainly positive about all the three segments.
Right. Very briefly, what are the global linkages for the pulp imports? Of course, the prices go up, that hurts. Input costs go up, but otherwise, what's happening? And are there?
No, in terms of input prices, I think the major reason why the input prices were pretty high was mainly because of the supply chain disruptions, and which are now easing off. So I think those things should, come come off very soon, and that is where we are expecting that the input prices should kind of level out very soon, particularly on the imports. We are about just about 25% or 15 to 25% dependent on imported pulp, and most of it, the balance is what we produce. We have our own pulp plant, so we buy wood and produce the pulp. So that's not an issue. The major issue was, of course, not the pulp prices, but the coal prices. So the coal prices is what was keeping up, and we are expecting that coal prices should kind of normalize very soon, because it all depends on when the government allows us to, because we have to depend on the open market, because the coal linkages which we have are not we are not able to meet them. So we are buying a lot of coal and keeping that in stock to ensure that we don't run out of coal.
Okay.
So that is, I think, the global issues are now, not a major issue. I think the prices are falling in terms on the imported pulp. The major issue is going to be coal.
Okay. I want to talk a little bit, by the way, the rates that Dreamfolks IPO has settled at indicates a big bang listing. It was in any case expected to be a very solid listing for Dreamfolks, and I think it's settled at 500 rupees versus the issue price of somewhere around 320 or so. 508 is where it's settled at. So look at that, 56% higher from its issue price of 326. So that's expected to be a good one. Mr. Shah, good morning. I want to talk in detail about the real estate business, because that seems to be the big growth area for you. Although as per your presentation, just 4% of your revenues currently comes from there. But you have about 64 lakh square feet under construction across 5 projects. Can you tell us what could the revenue run rate be annually? You're sitting on a base of around 139 crores as of FY22, and it's been stable for the last 3-4 years. It's been between 139 to 160 crores. How much can you grow that business by?
So I think the EBITDA contribution that you're seeing from the real estate business is actually coming only from our leasing income for our existing 2 commercial properties. So that's going to remain steady. What is happening is, for the products that we have launched, as per accounting norms, we cannot recognize the EBITDA of those projects unless and until they are completed. So we will be having chunky EBITDA contributions, as we complete the projects. I think probably they will start from FY24, when we will complete couple of our projects. So what you are seeing, I cannot give you a linear kind of a growth projections for the real estate EBITDA, because as I said, as we complete, we'll recognize the EBITDA for those completed projects, which is the requirement of the accounting standards. So what you'll see steady is our leasing income, which is what you're seeing, 125 odd crores that you're revenue that you're looking at.
Yes, the rental income is what you're talking about, right?
Exactly.
Okay. Yes, I've seen that's at about 33 odd crores. So that's been stable compared to what you've seen last year. There hasn't been any growth there. But there's talk that you're looking to demerge the real estate business, or at least considering it. Is there something on the cards, anything that you're looking at in the next 1 to 2 years?
No, I mean, right now it's not in our thinking.
All right. Okay. On the residential side, the Niara project, could you tell us what is the update in Q2 so far? I mean, how many units have been sold?
So we had sold almost about 50% of our inventory, and almost about it has a revenue possibility of about 3,000 crores plus, which is the phase that we have launched. And I think we've done about, by the end of second quarter, we had done about almost 50% of the sales from that particular segment. So we are expecting a good traction, and hopefully we should be able to do about 85% by the end of this year.
85?
This financial year.
You will... No, how much of the inventory is remaining?
About 50%, as I said, about 50% was sold till the end of first quarter, first quarter.
So you achieved sales of 434 crores in Q1 in your residential business. On an average, what could you do for the remainder quarters?
So we would probably, we are looking, because we did pretty well, we were looking at a price increase in between, etc. and all that. And hopefully, as I said, by the end of this year, financial year, we should be able to, we are hoping to sell about 85% of our total inventory.
Right. So just one last question. Broadly speaking, for the full year FY23, looking by what you've done in Q1, what can we expect? I mean, if you just analyze what you've done in Q1, I'm not sure if that is the right way to go about it. You're looking at about 16-17% growth in profits and about 15% growth in top line. Are those the kind of numbers we should work with? 23 over 22?
See, it's I mean, quite honestly, in terms of revenue, probably we will take our revenue from in paper to about 3,000 crores plus, and in textile probably close to about 1,000 crores. So 4,000 crores is what would be our revenue by the end of this financial year.
That'll be,
and margins on the paper would be somewhere around. You can take the present margins that we are getting, maybe increase of about 3% or so, and textiles will remain the same. So that is more or less what we would be doing, hoping to do next year.
So revenues actually are, then you're projecting lower in 23 over 22 at about 4,000 crores.
No, I don't think so. We are projecting. Last year we did 2,500 and about 3,500 crores, right?
Revenues at about 41-30 crores, right?
No, then you're in. No, I don't think so.
31 crores.
4,131 crores.
Is what
so you're saying you'll do 3,000?
Oh, you're talking the gross revenue. Yes. Then probably we'll probably do around the same thing. Is what I'm trying to say. What is going to improve is our margins. That's all.
Margins were about 12% last year. So you'll be there, around there, or
about 50, you can take about 15% maybe.
15%. Okay, got it.
And in the commercial real estate space, apart from Aurora and Centurion, any more commercial assets that you're going to put on board?
Not really. We have we are contemplating something where we have about a million square feet planned in the Niara project, but that was supposed to be done after a few years. We are seeing whether there is a need for us to fast track it right now, but there is no such decision made. But no other commercial plans in this year.
All right. Thank you very much. Appreciate you joining in, and good getting that perspective from you.